how to trade in crude oil. That's what this video is going to be entirely about. So last month, we did a very beginner-friendly video on what is commodity trading and how to get started with it. And in the comments, we saw a lot of positive responses from people wanting to learn more about this topic. So today, we'll be starting to learn about commodities deeper with the mother of all commodities, which is crude oil. So in this video, we'll check out how to trade in crude oil, what are the margins required, and why crude oil is interesting, along with the major data points that affect crude oil pricing. We have a lot of things to learn today, so make sure you keep your notebook as well as your trading terminal open while you watch this video. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So let's get started with today's topic, which is crude oil commodity trading. So crude oil, also known as the mother of all commodities, that's what we're going to learn about today. Why commodity trading? Again, we have talked about this in the previous video also. But one thing that you have to really understand is trading after work. A lot of people cannot or are not able to trade during their work hours. It can be due to their work pressure, due to the company policies. So if you're a good trader and you're limited by the time in which you trade, this commodity trading might be the right place for you. So trading after work, 5 p.m. to 11:30 p.m. That's what happens here. Again, we have talked about this in detail in our previous video. So if you have not watched the beginners commodity video, go check that out before you come into this learning session. So setting the agenda for the video straight, why crude oil, how to trade crude oil, what are the capitals required, and things you need to check before trading crude oil. Okay, there are a lot of data points because again, this is a real commodity and it is traded worldwide. So there are a lot of data points that you should be checking and understanding before you get into this world. And also use crude oil to take positions in stocks. Okay, that's one bonus point that we'll be getting out of this segment for all of you stock traders out there. But don't worry, we'll get into that portion very, very soon. So let's start with why crude oil. Again, mother of all commodities. Why? Because in most of the things that you consume and see in your daily life, crude oil is a major part of it. Okay, you're going to your office, you're either taking a bus or your private vehicle. Both of them need either petrol or diesel. Right? Again, your car or anything that you touch, even this mic, it has plastic in it. How do you think it's manufactured? Crude oil is, again, in almost everything that you see in today's world, including the petrol and diesel that you fill to the plastics that you see. Even pharma, the medicines that you consume, have crude oil as one of their major raw materials. Okay, and directly impacts the cost of goods and services all across the world. So if the diesel or petrol or even crude oil prices go up in the world, everything, including your tomatoes, right, because it is getting transported from the farm to your doorstep, even that cost will increase. So crude oil will directly impact the cost of goods and services across the world. Make sure you understand that as well. Now coming into crude oil benchmarks. So benchmarks of crude oil, there are three major benchmarks. Okay, in this, the first one, the major one that you have to understand is WTI, West Texas Intermediate. We'll get into this much more deeply. Then you have the Brent crude. Then you also have Dubai. So all crude that is found in the Northern Sea. Okay, you can check out the map and you can find the Northern Sea. Any crude oil which is extracted from that region, it's called as a Brent crude oil. Any crude oil that is mostly extracted from the US, that is WTI. Okay, West Texas Intermediate. And any crude oil which is found generally in the GCC region, right, it comes or it's called as Dubai crude. Okay, note these benchmarks are formed based on the impurities present in the crude oil. So all of them are different. All of them are different from the areas they are extracted from and also from the type or the purity of the crude oil that they offer. Okay, so let's move ahead. We should be looking at WTI. So no need to look at or try to focus on anything else. Just look at WTI. So let's understand how to find it. On TradingView, it is called as US oil. So once you're in TradingView, you can just come here and you can click on the search button here. You can type out US oil. and you can see WTI crude oil. Okay, that is what this is, WTI crude oil. You can click on it and immediately you'll be shown the graph of WTI crude oil. Okay, this is what you have to understand. Super important. I've changed into the daily chart and you can see how volatile it is, right? And I would say that's one of the best cases for a trader. If you think that it is volatile, especially for directional traders, it is a good instrument to trade in. Okay, so you can see that over the last 2 days, just over the last 3 days, the WTI crude is up more than 7%. Why does crude oil just randomly jump 7% in just a few days? We'll get to that, but wait for it, right? You can see that a lot of technical patterns can be observed in the charts of crude oil, like any other technical analysis instrument. So you can see that these levels that it was trading at, which was around 72.3. It was super important. And once a breakout came, it went above the 200 days EMA, which is the blue line that you're seeing. And now it's giving a proper breakout. Any triangle or pattern based breakouts also, it makes sense, right? You can draw a triangle like this, or you can go a bit more aggressive and take the trades here. So you can see that the last traded price here is 78.27. What does that mean? It is a WTI crude. So this value is in dollars. Okay. So you'll need to spend, or the cost of 1 barrel worth of crude oil in the international market today is $78.25. Okay. And with today's rupee value, which is somewhere close to 86.6, let's do a quick calculation. 78.24 into 86.62. Okay, it is coming out to 6,777 rupees. Okay, I'll tell you why this is super important when we get to the next step. Wait for it. Also, do remember that traders like crude oil really well because technical analysis works really well here. Okay, so let's move back into the presentation. So you saw and understood what US oil is, right? So let's get into what crude oil in MCX. That's what we're going to trade on, right? So again, if you've not watched the beginners video, go check that out because it's super important. You can't directly trade on US oil or WTI crude. You can only trade on what is trading in the Indian markets, and we are going to trade on the multi commodity exchange or MCX. So how is the price in MCX calculated? It is very easy. Commodity price into dollar price. So let's check out what is the price of crude oil right now in MCX. Okay, going back to trading view, you can type in crude oil here and you can find crude oil futures and you can see MCX here, right? What is the price? 6,775. Okay. Do you remember what we said earlier? That the dollar price is super important. You also have to understand the US oil price. So earlier we got a value by multiplying US oil price into the dollar value. Exactly, or very near to that value is what the MCX trading price would be. So you understood that even in the Indian markets, this commodity in the MCX is hugely defined by two things. One is a WTI crude price, which is the international price, along with the dollar versus rupee price. So you'll have to always look at two aspects whenever you're trading in crude oil. So here we understood what is the instrument that you should be tracking in the Indian market, which is on MCX. It is called as crude oil. Okay. But again, there are few things to note before you get into this deeply. So the first thing is WTI or US oil trades till 2 a.m. in the Indian time. Okay, but our markets, that is MCX markets, close at 11:30 p.m. or 11:55 p.m., right? Depending on the daylight savings time in the US, this time may vary, but the most that the market will be open till is 11:55 p.m. So there is always a gap between the US price as well as the Indian closing price. Okay. So, because of this reason, gap ups and gap downs are possible. It's a real thing. You have to understand that. And price of US oil is price of 1 barrel of oil, and 1 barrel is 159 liters. So, I'll give you a fun fact or a fun activity here. So, go check out how much liters of petrol as well as diesel you can extract from 1 barrel of crude oil, and add the production cost of $5 or $10 per barrel to do that conversion or to do that extraction. and just see what is the real price of what petrol and diesel should be. Okay, that's a fun activity for all of you. And again, just reminding you that change in dollar price will impact crude oil price. Again, it's a very simple formula. Crude oil price in the Indian market, you remember that formula, right? WTI price into dollar price, dollar versus rupees current price today. So again, you have to really understand this before getting into trading in crude. So now you understood what is crude oil, why is it used for, and you also understand how the prices in the Indian markets are derived. Okay, but now we'll get into the question of how to trade. How do you start trading in crude oil? Okay, so two ways, right? So the first way is crude oil is available in two contracts, which is crude oil. You can find the contract size to be 100 barrels. Then there is also crude oil mini, where the contract size is 10 barrels. Okay, depending on this change, the margin required to trade on both crude oil as well as crude oil mini, it will be wildly different. Okay, if you remember the last video, we had talked about what is the difference between the major contract as well as a mini contract. Similarly, crude oil also has that. So traders really like crude oil futures, okay, because you can catch all the directional moves in the market, but they also like the option segment. Okay, so I would say crude oil is one of the very few commodities with an active options participation. Okay, so it is available in both futures and options. You have to look into both of them and understand what fits your trading style better before getting started. So let's go to our broker's terminal. Make sure you do this with me. Okay, so once you come into your broker's terminal, click on the plus or the search button. You can type in crude oil. Right? So the first three things you're seeing on screen, what are they? First is MCX Crude Oil 25 Jan futures. Then you're seeing NSE Crude Oil 25 Jan futures. But do not take that. Take only the MCX one. Why? Because there is no liquidity currently in the NSE Crude Oil market. You have to always open MCX charts only. And you have to only trade in that. So I want to add crude oil as well as crude oil mini. So let's find that out. Crude oil M is what you should type in here. So MCX Crude Oil 25 Jan futures. What does this mean? I'm looking at the 2025 Jan futures contract of what crude oil's price today should be. Okay, so you can see that crude oil in MCX, it is trading at 6771, and you can see the crude oil mini price is slightly different, but that's okay. It's small fluctuations that you're seeing. It normalizes towards the expiry time. Okay, so you can see that you bought or you added both contracts here, right? One is crude oil M, the other is crude oil. One thing that you have to really understand, because in your broker's terminal, sometimes it will only be written crude oil, which is a symbol. You should not get confused between the two. You can see here on my screen, here you can see it is crude oil 25 Jan futures. Then on the next contract, you can see it's crude oil M 25 Jan futures. Okay, so make sure you have that very clear. Now, the question that a lot of people would have is, what is the margin required for trading in crude oil? Okay, so let's quickly check that. To buy or sell one lot of crude oil. So I'll just go into the buying screen here. The margin required to buy or sell one lot of crude oil in the Indian market today is 3.3 lakh rupees. So since it's a futures contract, there is no margin difference between buying or selling. So you can see that no matter if I'm buying or if I'm selling, I'm having the same margin requirement, which is around 3.32 lakhs. Right? But if I'm going into crude oil M, crude oil mini, and going into the trade here, right, you can see it's much different because this is only trading at 10 BBL, right? So we discussed earlier, mini is a smaller contract. So to trade here with a lot size of 10 barrels, you'll only need 33,304 rupees. And you can understand why this is hugely loved by traders. Understand, when you're going in from the major contract to the mini contract, you're taking a lot more leverage. So you'll be seeing the correct or the exact PNL fluctuations on screen. So similarly, you can also trade in the option segment. So I've just taken 6,800 call for reference, and in order for you to buy one lot of options here in MCX, you have to always, as always, pay whatever is the premium multiplied by the lot size. Okay, so here it is a crude oil major contract, so I'll have to pay 100x. So you can see here that the required margin is nearly 7,000 rupees. But if I'm going into selling mode, you can see that if I want to sell one lot of options in crude oil, I'll have to pay up a margin of 2.67 lakh rupees. But before getting into the option segment, I want you to understand the basic concept of liquidity here, because it's a commodity and you can see that there is not huge volumes in the Indian markets right now, right? So because of this, you might see a lot of problems with getting trapped in your option strikes. Okay, so one option that you buy or sell right now, it can become hugely in the money or far out of the money that you're not able to exit out of it. So mostly getting trapped in it out of the money is fine. But if you're in the money and you're struggling to exit, that's going to be a huge problem. So I would suggest use options only for small scalping intraday trades, or try to always hedge your trades. It's super important. Trust me guys, you do not want to take delivery and pay the penalties for going into crude oil options. So then you understood what are the margins required. Now you need to understand what are the things to check before you get started. Okay, so the first concept that a lot of traders use is you look at the WTI chart. You'll need TradingView for that. Okay, it's a free platform. You can just make an account. It's not a paid promotion. So you can just use a TradingView account to check out WTI price, and then you can trade the MCX chart. You'll see that often the patterns and the levels are usually respected. So you can see that the crude oil futures in MCX, it's trading with a price action that is near the day's low. Now let's quickly move into crude oil pricing in the US oil. Okay, so you can see that even this contract is trading near its day low. There will be rupee fluctuations throughout the day, but if you keep that aside, mostly price action is going to be similar. So what are you going to do? You're going to look at and understand WTI charts, and then you're going to trade MCX charts. So on MCX, you'll have to look for the proper entry and SL. But wait, that's not it. You have to also look at these 4 major data points when you're getting started with crude oil trading. Okay, so the first one is geopolitical news. So you know that, let's take the Russia-Ukraine war, or any war or any tensions between oil producing nations. This always has a huge impact on the crude oil pricing internationally. Okay, so you'll have to understand and watch out for that really well. Otherwise, you'll see the prices flying and you'll not understand why. Right? So you see that even the crude oil prices recently have increased by a lot. How do you find out, or why do you think it happened? You can easily search crude oil price increase news and you can see this is what pops up. Okay, US sanctions on Russia could push oil over $85 per barrel. Okay, that's what Goldman Sachs is saying. So there are a lot of sanctions which is happening, and there are a lot of supply cuts which is happening. So based on these 2 factors, the price of crude oil is moving up on the daily charts, right? You can see how far up it has come in the last 2-3 days. So that's something that you really should understand. The second data point that you should be looking into is OPEC meetings data. So OPEC is the world's largest, you can call it the cartel of crude oil. Okay, so these are oil producing countries around the world. They formed something which is called as OPEC. So it's an organization which dictates the demand and supply. So this organization, they decide how much should be the production of each of these OPEC nations crude oil. Okay, so how much crude oil should be extracted and sold in the international market out of all of these OPEC members? That will always come out in the OPEC meetings data. So based on this, there are a lot of demand and supply factors again at play here, and the international prices will move according to that. So if the supply is decreasing, the prices will increase. And if the supply is increasing, the prices can very usually fall. Okay, so you have to understand this really well. The third is again the inventory data. So the US puts out the crude oil inventory data every week at 10:30 a.m. in the US. Okay, so even this hugely impacts what is going to be the international prices of WTI crude. Okay, so you have to understand even that deeply and understand what's the demand and supply fluctuations that are going on over in the US as well. And for crazy situations like the pandemics or any unforeseen circumstances like wars, all of this could create a lot of chaos in the crude oil market. And you can see that even now, but that's not something that you see every day. Okay, so what did you learn here? You understood what is crude oil, why the crude oil pricing moves, what all are the factors that you should be looking into, what all are the things that you should be taking care of. Remember what I said about options as well as mini contracts. Make sure you have that in mind really well. And now the only part that is left in the video is impact on stocks with crude movement. This is going to be a very small segment but value packed. Make sure you watch till the very end. So there are three categories of stocks which are affected by crude oil, but largely, as I said earlier, the entire Indian economy is going to be impacted by crude oil pricing, right? And even the tomatoes or the onions that you're consuming every day, their prices will also be impacted by crude oil pricing. But let's get into the proper definition of upstream, downstream, as well as midstream categories. So upstream is exploration, drilling, and production of crude oil and natural gas. All these companies are called upstream oil companies. Then you also have downstream companies, which is companies that work with refining of crude oil into usable products like petrol, diesel, and LPG. Do not worry, we'll go into the list very soon. Then third, you also have midstream, which is transportation and storage of crude oil and gas. So MarketFeed has written a very detailed article about all of these categories. You can just come search MarketFeed upstream and you'll be seeing that article here on Google, and you can learn a lot more about it if you are interested. But for the sake of this video, let's quickly look into which all are the upstream companies. So ONGC, Oil India, Reliance Industries, and Larsen and Toubro, these are what are called the upstream oil companies in India. Okay, so they'll be the first one who are going to be impacted positively or negatively with the crude oil's international pricing. And two, downstream companies, Indian Oil, Bharat Petroleum, HPCL. So these are the very popular downstream companies in India. And you also know that with GOBP, okay, Reliance's petrol pumps also operate in the country. So Reliance again is both an upstream as well as a downstream company. And there are midstream companies like GAIL, Indian Oil, the pipeline division, Petronet LNG, which largely stores the natural gas which is coming into the country. Oil India, they also have a pipelines division. So this is what you should be understanding. There are three types of sectors. They'll be affected very differently based on the crude oil prices internationally. And then you can also look into the other sectors. So when I tell you about this, it looks very logical, right? Aviation stocks, their prices would be very much dependent on, because their profits are very much dependent on the crude oil pricing, their stock prices will also be dependent on it. So make sure you always, when you're analyzing Indigo and SpiceJet, you have this in the back of your head. Cement stocks, paint stocks, tire stocks, even FMCG stocks, they can also have an effect based on the crude oil prices internationally. Okay, so that's it. That's the presentation from my side. Hope you understood the concept really well, which is trying to understand how you can get started with crude oil trading in India. But again, as I have said throughout the video, make sure you learn this concept really well, because if you do not and you directly jump into it, because you will be dealing with futures and options, there are a lot of problems that can come in. So first, learn what futures and options are, what are contracts, what is the complexities that go on over there. So if you're already a good trader whose only limitation is the time in which you can trade, you can definitely consider crude oil trading. So see you all in another video. This is Ajay Ajith signing off. Bye bye.